Yo, what's good, young investors, and welcome back to the channel. Today's video is filled with absolute game. I'll be hitting you guys with everything you need to know about the stock market. From what the stock market actually is, to types of investments you guys can make in the stock market, all the way to common stock market terms that you guys can expect to see and hear. I really recommend that you guys grab a pen and a paper for today's video. I guarantee you there's going to be valuable information in today's video that you guys did not know about. Now, the basics of the stock market was actually my very first video here on YouTube. The video is crazy informative, but I was so nervous. And to be honest with you guys, I really wasn't sure what I was doing in terms of editing. So it's only right that I actually run it back this time around and do you guys a solid and hit you with even more information. But of course, you guys already know this. Before I get into today's video, I gotta hit you guys with today's gem of the day. Today's gem of the day is think like an investor. Look at the things that people use most on a daily basis and ask yourself, what companies own these products? And is there any way that I can invest in the companies that make these products or not? I've told you guys before, and I'll tell you guys right now again, the rich and wealthy play by a different set of rules. And of course, in my opinion, it's time that we all start doing the same thing as well. And of course, that's today's gem of the day. I really hope you guys enjoyed that. And lastly, I'd really appreciate it if you guys could hit the like button on today's video. It really does let me know that you guys are enjoying the content and really finding it useful as well. On top of that, it also really helps YouTube promote the channel. So thank you guys, I appreciate you. And without further ado, let's get into the gems in today's video. So of course, the stock market, what exactly is it? The stock market is basically where companies like Walmart and Google go to issue small parts of ownership in their businesses in exchange for money. And of course, in turn, investors like myself and some of you guys watching now then buy and sell these small parts of ownership in these companies, which are called stocks or equities. So to keep it simple for you guys, every single time you buy a stock, you're buying a small part of a company. And the main reason why stocks are actually issued in the first place by companies is to grow and expand their business. And I want you guys to remember that issuing stock actually helps raise money for the business. And so, next up, types of investments you guys can actually make in the stock market. The very first investment you guys can actually make in the stock market is purchasing an index fund. I want you guys to think of an index fund like a basket filled with companies. It's generally more expensive trying to buy into a bunch of companies separately. So of course, index funds actually fix that problem for you guys by offering a whole bunch of different companies for the price of one. The cool thing is, some index funds actually pay dividends to you as well. But of course, they do come with a drawback. They do tend to have lower returns due to the sheer amount of companies that they actually have in the basket. And so, number two, ETFs, or exchange traded funds. ETFs, like index funds, also hold a whole bunch of companies. The only major difference being ETFs are actually traded like stocks, unlike an index fund where it's only traded once per day. So it's a little bit harder to get in and out of an index fund. And so, moving forward, number three, bonds. Bonds are basically loans that you guys can actually make to governments or corporate businesses. Bonds tend to be a safer investment because they pay you, the investor, interest for basically just holding them. On top of this, bonds are typically backed by a promise from the government or the business to pay you the original amount of money that you invested back. And so, that's a bond. Finally, number four, stocks. As I just mentioned earlier in the video, stocks are basically small portions of ownership that you can buy from companies. And so, once again, moving forward, why do people actually invest in the stock market in the first place? Investing in the stock market happens to be one of the many ways that you guys can build wealth for yourselves and your families as well. The stock market as a whole has historically gone up over time. And as a result of that, having shares in strong, stable, profitable companies has made investors money over time. And remember this as well, you guys. Just because you can earn more money through the stock market doesn't mean that you can't lose any of it as well. There will always be risk with whatever you do. And of course, with the stock market, that's no different. This is really where understanding and researching your companies comes in. At the end of the day, we are buying businesses. And so with that, I actually wanted to get into the last segment in today's video. Stock market terms that you guys can expect to see now and once you guys start investing as well. People really like to use words in the stock market that sound sophisticated for one reason or another. But their meanings are ultimately pretty simple, I promise you guys. So, first up, bear market or bearish. A bear market is basically when the overall price of stocks in the stock market are going down. And being bearish basically means you or somebody else is expecting the price of a stock to go down. And the reason people use these terms is pretty straightforward, because when a bear strikes, it will typically strike with this paws down. Hence the name, bearish or bear market. Next up, the complete opposite of this, bullish or bull market. A bull market is basically when the price of stocks are going up over time. And when you or somebody else is bullish, you're basically anticipating the price of a stock to go up. Or it could also mean that you guys are optimistic about a stock. And of course, this has a pretty straightforward explanation as well. The reason people say bullish or bull market is because when a bull strikes, it will typically strike with its head up. Go figure. And so next up, going long. Going long basically means you're investing into something like a stock, for example, for the long term. And so moving forward, volatility. Volatility is basically how often the price of something like a stock goes up and down. Tesla and Bitcoin are great examples of this. Their stock price is constantly shifting up and down in price. Both of those would be considered highly volatile investments. And of course, next up, dividends, my bread and butter. Dividends are basically small payments made to investors for owning stock in companies. And next up, an IPO, or an initial public offering. This is basically when a private company becomes available for investors like myself and some of you guys watching now to invest in. Private companies will typically only have private investors, but once a company goes public, it's free game for everybody. And so this next one is a common one you guys are gonna see. It's blue chip companies, or blue chip. When you guys see or read blue chip, I want you to think of established companies like Google and Facebook. And so this next one is also very common, and it's called market cap. The market cap is basically the total value of shares that are being traded in the stock market. The market cap is basically found by multiplying all the current shares in the stock market by their stock price. For example, if I own a company and I have 1,000 stocks currently being traded at $10 a share, and I just multiply those 1,000 by 10, I'd get $10,000. And that's basically my company's market cap. And next up, liquid or liquidity. This one is super simple. It basically just means how quick you can get your money in and out of something. Real estate isn't considered very liquid because you got to go through escrow, finding a buyer, getting a loan, and all that sort of thing, which can easily take months to process. Stocks, on the other hand, are considered very liquid investments because you can literally get out of a stock in a day. And so, moving forward, a rally. A rally is basically a quick increase in the price of the overall market or a certain company. Let's say, for example purposes, the prices of stocks are just going down and down and down, and then all of a sudden they start going up. That would be considered a market rally. And it would basically be the same thing for a stock as well. Let's say a stock price is going lower and lower and lower, and then all of a sudden it shoots up. That would be a stock rally. And of course, last but not least, payout ratio. A payout ratio is basically how much of a company's profits they pay out to investors in the form of something like a dividend. If the payout ratio of a company is, let's say, 50%, that means 50% of the company's profits go to paying dividends to the investors, and then the other 50% of the company go to expanding the business and reinvesting into the company. And that's it. Those are some of the most common things you guys are actually going to see when you're investing into something like the stock market. Of course, there's always going to be odd words that you might not understand that are being thrown out. So I really don't want you guys to hesitate when you're actually asking questions. Remember, it's all part of the process. And so with that, I just quickly wanted to say thank you guys for rocking with me. Of course, like and subscribe to the channel if you found any of today's content useful. And of course, beat the odds and do the numbers. I'll see you guys on the next one.